let's get started. But before we do, I just want to put out there to anybody watching this webinar, Madison Trust, we are a passive custodian. We're unable to solicit specific deals to our investor base, but we do really advocate for relationships. It is up to you to do your due diligence on all investments that you choose to hold within your IRA accounts at Madison Trust. And with that said, let's get started. Shawn, can you tell me a little bit more about what possible factors are contributing to the current volatility of the market right now? A lot has happened over the past week, I feel like.
Yes, for sure, for sure. And thank you, Nicole, for having us on. I heard it today. I think the word uncertainty is like we've said it like 650 million times over the last like 45, 60 days, maybe even all this year. And so there's just so much going on. Like it's a loaded question. It's what is contributing to it? There's so much, right? There's this great unwinding that's going on with the new administration, right? Trying to level the trade balances around the country. That is around the world, actually. That's like the big thing, and that's what's moving the markets right now. We're a student of the market. We are following this every day, even though we're in the alternative investment space. All of what's going on is really important to us, but it's this great unwinding that's going on. You've got inflation that still needs to be tamed, right? Everybody's not sure what the Fed's going to do with the interest rates. You have a potential recession on the horizon that people are worried about. This massive debt problem here in the United States that if not handled now, it could be detrimental to our economy, like permanent changes in our economy. So there's just so much going on right now. And then recently, just the weak dollar. The weak dollar is coming out, which is actually creating problems for countries around the world who are trying to, strike a deal with the U.S. from a trade perspective. There's a lot going on. There's a lot of uncertainty, and honestly, right now, the alternative investment space is the place of hope in the marketplace where people are coming to. And in fact, we've raised more capital than we've ever raised in the last 90 days because people are trying to get away from the uncertainty. Hard assets.
Stock market, yep.
Are where people are fleeing to for safety, and that's what makes Bequest a great option.
Yeah, we're just seeing that so much. People are not having much faith in the stock market right now. They want to be able to utilize their 401k plans towards investments that they're passionate about, and real estate being one of them. What strategies are typically most effective during periods of uncertainty?
Yeah, this is a good one, and let me share my screen here. And this is obviously what we were just talking about, the S&P being down, the VIX being at an all-time high. There's headline after headline is just creating uncertainty in the marketplace. But what is interesting during times of uncertainty, and we take investors through this process right now. We say, listen, if there is a temperature somewhere, right? If you're drawing a temperature and you say the economy is certain or uncertain, right? And we say uncertain is up here, certainty is down here. During times of certainty, you can ride the coattails in the market, right? Pretty much, you can't miss with the market. You pick your tech stocks, you pick your main largest entities, publicly traded entities, and you can ride the market up, right? Almost anybody can win during times of certainty. But during times of uncertainty, right? During times of uncertainty, which I think it's clear we're there right now.
Yep.
There's two things you want to do. You want to find operators, investors who have made it through times of uncertainty, who have investment strategies that have been proven to weather the storms, right? And so you want you want to move away from more traditional investments to investment vehicles that have proven their ability to weather the storm. At the same time, you want to seek uncorrelation to the markets, right? And you want to find a place where I can get away from correlation to the market. A good friend of mine, a guy named Jan Naismith. Jan is actually famous in a couple different ways. First,
Okay.
he's the grandson of the inventor of the game of basketball, right? Naismith is a last name.
Okay.
So Jan lives here in Sarasota with me, and he's been in the industry for 40 years. He was the president of NAM. He's just a mathematician. And I said, Jan, we've been operating our funds for the last 5 years. And I'm curious, can you run an analysis on our fund? Can you tell me what our beta is to the US stock market, or to the S&P 500 specifically, is what I asked him. And so he went away and did some math, and he came back to me and he said, Shawn, I've ran all the data on the fund. We've been in business for 5 years now. He's like, the beta on your fund to the S&P 500 is 0.03. I'm like, 0.03? He's like, yeah, virtually zero correlation to the markets, to the S&P 500 specifically. And so during times of uncertainty, you need to find non-correlated assets to the market. And this reminds me of one of my great heroes, Ray Dalio. And in fact, I got to meet him in February of 2023. I met him at an event. And the one thing that I walked away, I'm a big student of Ray, but what he drilled into us just 2 years ago is what he calls the holy grail of investing. Like when a guy who manages billions and billions of dollars tells you, here's the holy grail of investing, you actually listen. You listen up.
Why not? Sure.
Yeah, right?
Holy grail.
What he said to me was, if you can find 10 to 15 good uncorrelated streams of yield streams, 10 to 15 uncorrelated streams, and you put them into your portfolio. These are 10 to 15 asset classes that don't look like each other. And in fact, when one goes up, the other one doesn't go down, or if they don't go up together, they're uncorrelated. There's zero correlation to these assets. If you can find 10 to 15 of them, and you can manage your portfolio in such a way, you'll have reduced 80% of the risk in your portfolio.
Wow.
And so I think about how hard it is to find assets that are uncorrelated to each other, and how folks that are on this webinar, they're trying to manage their portfolio well. And the answer is not picking a better mutual fund. It's not picking a better stock. Like, that's not the answer. Is to find asset classes that you believe in, that you trust, that are not correlated to each other. And the best way to do that, the absolute best way to find uncorrelated assets, are in the alternative investment space, in the alt space. And so a lot of money is moving into the alt space because Ray was right. If you want to reduce risk in your portfolio, you need to find assets that are not like others.
Right. Diversification, that's the way to do it. Speaking of investment vehicles, what are the professional funds that you're seeing as most successful right now, and how do they typically operate?
Yeah. So as I mentioned, in the alt space, alternative investment space, you can find a lot of professional funds, private funds. They operate under different regulations. But what, in essence, a private fund is, it's a group of investors who have come together and professionalized a strategy that they have tested over time. They've likely tested that strategy with their own money. They've been doing it for years and years and years. They've proven that that investment strategy works, and they've got a track record of performance. And so those private fund managers like Bequest take the product and we go open up what's called a Reg D or Regulation A, one of the two, and we begin raising capital and deploying capital against that strategy. Another way to explain professional funds is there's no active management, right? There's no active management by the investor. You've trusted your capital with an operator, and they're putting that strategy to work. There's typically, in our space, we're not taking the money and putting it in the stock market. We're actually putting it into hard assets. We have very little leverage or no leverage on the assets. These aren't complex strategies for us. They're very simple strategies, and it's not an illiquid position, right? This is not the type of investments that we focus on here at Bequest. I'm trying to stop the share because you don't need to see that anymore. But did I stop the share? I'm sorry, Nicole.
Yeah, I can't see the screen. Do you have anything to share now?
No, I'm good. That's what I really wanted to show around professional funds, right? These are some of the attributes of professional funds and how they operate. And investors come in for a certain period of time, and it may be, you know, a life of an asset. It could be a set period of time. You know, these are the liquidity events that are very different than the public markets. And what kind of separate private investments from public investments is that, you know, we have to deal with these kind of liquidity cycles to get investors out, because we don't trade our assets on a public market. And now some of that is coming, but right now, you know, the benefit, and I think it's actually a benefit of the alternatives, is people come in and they can't leave until a certain period of time, which is very different than the stock market, because when an event happens, people can easily exit, likely at the wrong times.
Right.
They're likely exiting at the wrong times. And when you're in an alternative investment like this, we stay the course, you know, no matter what's going on in the market, which actually benefits a lot of investors from maybe, you know, ejecting from the plane way too early, which seems to happen a lot in the stock market.
Yep. Can you provide an overview of assets in the energy and real estate sectors?
Yeah, so at Bequest, we have two different asset classes that we focus on, right? We focus on the real estate aspect of our assets, and we have energy in our assets. So those are two high-level pillars. But let me get into specifically what type of real estate investment that we do. We actually specialize in what's called note investing. And my business partner, Martin Sines, wrote a book in 2017. I read it. I was working in corporate America at the time, running investment strategies for some of the largest Fortune 100 companies. And so he taught me in this book how to buy mortgages off the secondary market. When I read the book, I immediately reached out to him and I said, I need to know more. Never reached out to an author in my life. And he's like, you need to come see me in DC. And so a few months later, I fly out to DC, and he teaches me over those next 6 months. I was actually his very first protege. He teaches me how to buy mortgages off the secondary market. I had no idea that this could be a thing, that banks actually sold mortgages, because I was in the Section 8. I was a landlord, a slumlord, as they would say. And I always felt like the bank always got paid when I didn't. And I'm like, I need to upgrade my position, right? I would love to be the bank, because nobody calls the bank when the roof's leaking or the pipes are broken. I'm like, so I want to be the bank. How do I get to be the bank? He taught me how to be the bank. And in fact, we went into business a few years later and launched Bequest together. But we buy mortgages off the secondary market, and we hold those mortgages for cash flow. And these are single family properties all across the US. We're in about 35 states. we hold the mortgage. We hold first mortgages, second mortgages, lines of credit, and those borrowers make payments to us. Our fund owns these mortgages, and we take those payments and we send those payments to our investors who come into our fund. If in fact the borrower stops paying, we actually have what's called a loan rehab shop here at Bequest, where the loan goes into repair and it gets fixed. We have people who are trained to work with the homeowner, to keep them in the home, to get them back on track. We may modify the terms of the loan to get them paying again. And if that doesn't work, we will exit out of the loan through foreclosure and sell the property. But that very rarely happens. But you know, if we have to take it there, that's what we do. And so we're really fixated on buying mortgages off the secondary market. That's a big part of what we do. What we also do here at Bequest is we have energy investments. And I might not have mentioned to you, but I came from the technology sector. Part of some of our investment strategies that I dealt with was building data centers for some of the largest firms, Facebook, Google, Amazon, and we would build data centers. 2 years ago, we came across an investment strategy where we could build energy parks, and we can buy energy and we can sell energy to tenants that brought their machines onto these properties. And so we built out these energy parks, and we buy energy for about 4.5 cents per kilowatt hour, and we sell it for about 9 cents. And the tenants who come into these energy parks, they are companies that focus on processing blockchain workloads and AI workloads. There's a lot of talk about AI. What people don't realize, the amount of power needed to create a chat GPT, the machines that are behind it, it's just immense. And so we're able to build out these energy parks, and we have one in South Texas right now. And it's all about cash flow, right? We buy the energy off the grid. We've built out a site. We can sell that power to our tenants for about 8 cents per kilowatt hour. And that's how we generate cash flow off of energy. That's energy investing with Bequest.
Pretty cool stuff. Pretty cool stuff. Well, we want to know a little bit more about Bequest, right? So what sets you guys apart and distinguishes you guys from other asset management firms?
Yeah, that's a great
Other
question.
than the two Shawns, right? The two
Of course.
Shawns.
Yeah, the two Shawns and the James of the world, and we have a phenomenal team. I would just tell you that if you come across our team, we're about helping investors achieve financial freedom. Like, that is what we do. Our team wakes up here every day to help investors do that. Phenomenal culture here at Bequest. But what else makes this different is we've been doing this now for a very long time. We have about almost 100 million in assets under management, which is, looking back 5 years ago, I would have never thought that Bequest would come this far when Martin and I started the company. We've been consistently delivering predictable returns to our investors month over month over month. It's a fixed income fund, right? And so a lot of people don't understand what a fixed income fund is. They think of, I got to go buy dividends to get a fixed income investment strategy, or I buy bonds, or what have you. But we deliver predictable, consistent returns, anywhere from 8 to 11, 12% return, depending upon what fund that you're in and how long you're committed to us. But we've been doing that now every month, distributing cash flow to our investor month after month after month. I think we're on like month 62 now. And so fixed income in the alt space, focused on mortgage note investing and what we call energy infrastructure investing, assets that are non-correlated to the markets, right? beta of 0.03. That's what makes us different here. You know, you've probably heard a lot about mortgage note investing, and there's many different types of that. We only buy performing mortgages off the secondary market. We don't buy non-performing mortgages. That's not what we do. We only buy performing mortgages off the secondary market. Those are some of the things that creates the difference here at Bequest, and why hundreds of investors have come alongside of us over the past 5 years and invested in our funds.
Oh, I love to hear it. I love to hear it. So what is Bequest's track record of performance?
Yeah, you know, if you look at our returns, we've consistently beat any of our competitors as it relates to fixed income products. You know, you can look at any product that's available in the market from a fixed income perspective. We've kind of destroyed it with our returns, mainly because of the asset class that we believe in. Right, we believe in housing, and I actually believe that housing is going to get the economy out of this mess. Right? You will see the housing market come through over the next 18 months and actually pull the economy out of this mess. We still believe in the housing market. We believe there's a shortage. That's what we're investing in. We believe our investment strategy is still solid. As it relates to energy, there's a demand that's coming that is unlike any other, right? This demand for AI and robotics and energy needed and compute power, all of that is just a great opportunity for our investment strategy. We're positioned well. We have a track record that we have performed, and we believe our investment strategy is going to continue to shine year after year here at Bequest.
That's awesome, Shawn. And our last question before we move on to some Q&A, I think, because it looks like the chat is popping right now. I'm seeing a few questions in there already. How can investors access Bequest funds through Madison Trust, self-directed IRA custodians like Madison Trust?
Yeah, great question. We've been working with Madison for years, and your team is phenomenal. It's our understanding that our products are already set up with Madison.
They are, yes.
If
you guys have a few funds already set up on our platform.
We do. And the one thing that I failed to mention that is unique about Bequest, which is a very, very important point, is we have products for everybody, right? A lot of fund operators only sell products to what's called accredited investors. And so a lot of people I don't even, what is accredited investor? Well, it's a label that the federal government apparently has put on investors, right? You got to have, $1 million or more in assets. And then the federal government says, you're okay, you can invest in private funds. But we actually took it a step further. We went to the SEC just last year and launched a non-accredited fund. We want to take our investment strategy that has been available just to the uber wealthy, and we want to take that same strategy to your everyday, what we call Main Street investor. And we did that. We got that approved. It took about a year to get our funds approved through the SEC for non-accredited investors. And so we have a product for everybody. You're accredited, you're non-accredited, it doesn't matter. We have a product for you. That does make us a very different type of operator here in the alternative space.
Thank you again, Shawn, and to the whole team over at Bequest. Love working with you guys, and best of luck on your capital raise efforts.
Thank you, Nicole. Appreciate it.